The following is a paid program. The views expressed on this program are not necessarily those of Entercom Radio, its sponsors, or affiliates.
Alrighty, good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. Alongside me, Harry Glanz.
What's up? Good morning, everybody.
Good morning to you, Harry. And of course, we bring in from our office, James Lutz.
Good
James.
morning, gentlemen.
And James brings in Peter Turing, Coldwell Banker, out in Weir Manuel, the Macomb offices out there. Hey, Peter, how you doing?
I'm fantastic. I'm glad to be here, guys. Thanks.
Pete, you're a well-known entity, definitely on the east side, all of Macomb County. Northern Macomb, I know you specialize in a lot of the northern Macomb areas, too. It's great to have you here. And we've got 1 hour of great mortgage talk and real estate talk with you. We're going to show you a couple helpful tips, hopefully, on how to get your home accepted, tell you some interesting stories, get your offer accepted, and some interesting stories on what's going on in the marketplace. And really, Pete, we're in the trenches every day. You got 4 people here that are really involved in the trenches every day, so we're looking forward to a lot of great information you can bring.
It's always a pleasure to be here, and we got a lot of exciting stuff going on in the Macomb County market.
So, last week, Harvey, we had our friend from Paramount Appraisals in. We had Mike Tomczyk on, and we talked about, obviously, what home values are doing. So, Pete, in your area, and we talked before the show, tell us what's hot in your market, what's going on, how year over year, from February 17th last year to now February 17th of this year, what's the market been doing out there?
So we were just talking about this before the show, actually. Last time I was here, it was in the summer, and I feel like I'm in the same market. The weather's changed, but the market hasn't. Our inventory is still low. I think overall in Macomb County, we're like a month, 1.7 months, something like that. Inventory under 250,000 is just flying off the shelves. We're still seeing a lot of highest and best. The bigger, larger homes, I call them the McMansions, they're sitting on the market a little bit longer, 40 to 50, 60 days. And, of course, some of the stuff that's hanging out a little bit overpriced is still there. I always hear one of your big things that Alex says is, it's not a lack of inventory, it's a lack of quality inventory, and we're certainly seeing that.
Yeah, and how are the property values holding out and the activity? Excuse me, the activity is very strong. I mean, we're up over 20% year over year right now, and applications are very strong. We had another good application week last week, which translates it into that the purchase market is still very strong.
Yeah, well, the inventory's down, but our pending sales are up. Macomb County overall is up like 10%, but that's not necessarily a representative market. Even where we are, Northern Macomb, we're up like 13, 14%. So even with the low inventory, buyer activity is still strong. A lot of the buyers that kind of got shut out in the summer are coming back, looking to buy again. They're assuming a winter market is slower. Not necessarily true, but they're ready to come back and buy. And some of them now have just said, hey, listen, I've got to buy whether the market's hot or not.
Well, It's not true this year. Okay, Usually in Michigan, because the weather is so bad, so cold, so snowy, and we've seen evidence of that this year. It's just what we do. I mean, it's where we live. It's what we do. It happens every year. But usually that means that people aren't out in their car, walking through people's houses. Sellers aren't listing their houses. But this year, it's a lot different.
Not this year. You better put your snow boots on to go show houses, because we're doing it whether it's, beautiful or whether you got a foot of snow on the ground.
Yeah, I'm going to say it was probably last year and this year. It totally changed the marketplace where there's no more seasonal buying. That now is a great time to buy. Maybe, Pete, there's just this another month or so over there, a little window where you might have a little bit less competition. This is all great stuff, and we're going to share with you some helpful tips to get your offer accepted. 248-539-9797. We take all your calls here live in the studio. Of course, we're brought to you by Capital Mortgage Funding. That's where you can find us all week long. The best mortgage banker. That's 1-800-LOW-RATE, the best mortgage banker. You're going to save a ton of money and get a real approval letter. And that's the key, is to really communicate with your mortgage loan officer. Make sure you have a strong approval letter. And Pete, we talked about communication really just when we first met this morning, and about that's ultimately the most important part of the transaction. Good communication, setting up the expectations, and making sure everything goes smooth.
By I think I know you guys rate match, but I think that's a really small part of it is the rates. And I think, having a loan officer that, number one, you can call up. James is a perfect example. He's done pre-approvals for me at like 10:30 at night. I've been, sitting out with a client waiting for something, or, yesterday I'm sitting in a house and we're trying to get closing costs. So having somebody that can get back to you quickly, can get back with accurate numbers, is just unbelievable. And of course, still, providing awesome mortgage service and closing you on time.
Right, and a lot of action going on in your area, too. We see that the U.S. home construction, new housing numbers came out over last month, 9.7%, showing signs that the builders are really ramping up, and there's definitely going to be a lot more permits being pulled and a lot more homes and holes being dug so that we can go ahead and start getting these new constructions up. It's key when you get the new constructions opened up, especially in areas. Now we've got people transitioning from their starter home and now moving into those homes, which frees up a lot of inventory. Hopefully we'll see a little more of that.
I'm hoping so. I know that we were actually listening to Lawrence Yunus, the NAR chief economist. He was saying that we're in Metro Detroit a little bit behind in the new construction, but we're expected to catch up in 18. So we're like a year behind everybody else. So that 9.6% I think was like 6%. We're hopefully should ramp that up this year, and we're seeing it too. I'm doing probably more new construction than I've ever done.
Right, that's great. No, that's great stuff. Definitely a shortage of homes in the marketplace have driven up the prices. They slowed sales a little bit, but still the HP, the Home National Case-Shiller Home Price Index was up. It was up 6.2%. In 2017. So definitely homes are appreciating all over Southeast Michigan. We're going to talk about it because homes are appreciating all over the place. It doesn't matter where you're at in the country. And again, we're going to throw out a couple other things. A lot of families have been calling us and starting to get that spring fever, maybe taking a look at that up north property, that second home or vacation home, or maybe even just something local that can get them out on the water or the golf course. And I'll tell you, that's really exciting for us too. So a lot of great things we can share with you. Again, all morning long, you're listening to the Hardcore Mortgage Show, and we're here to answer all your questions and make sure you can save a lot of money. Also, we never want to forget, James, we are in the midst of still these record low interest rates. There's no doubt interest rates have burped up a little bit. I don't know, maybe that's not the best word. They're jumped up a little bit.
They sure have.
But that's not going to prevent anybody, and it's never too late.
No, it absolutely isn't. We all play in the same ballpark. So if you do look at it historically, we are still low. A lot of people don't look at it that way, and they look in the here and now, and they want to panic mode over it. But really, take a step back, look at the big picture. Everyone's still getting a very good deal.
Well, people want what they want when they want it, okay?
Yep.
So they're used to, 3 3/4, 30-year fixed rates, 3 1/4, 15-year fixed rates. And rates right now, if that person told you 2 weeks ago that you could get 4 1/4, you can't get 4 1/4 on a 30-year fixed unless you're going to pay points and fees and everything like that. Not going to happen.
Yep. I was
It's
told
just
by a
not
bank
going to happen.
3 weeks ago that this was the rate. I said, well,
Yeah.
please take a look at what the market's done.
Yeah,
in
so
the
we
last
get those
2
calls
weeks.
all the time. I talked to a guy. He told me he can get you, get me 4 1/4 on a 30-year. No, he told you that 3-4 weeks ago. He didn't tell you that yesterday, this past week. He didn't even tell you last week. If he told you last week, he was lying. We're just, it's the Hardcore Mortgage Real Estate Business Show. We just call it as we see it.
Yep.
He can't get that rate anymore. If you want the rate, lock it in. That's how it works. And make sure you get it in writing and get a confirmation.
Yep.
Yeah.
And I always tell people, and I did this a few weeks ago with Harry himself too. Had a very aggressive deal that I was going after from another bank, and all I said to the guy was, "What you're telling me that the bank told you sounds like it's not possible. Either you're getting charged for that, or something. There's something funny smelling about this." And I said, "Just trust us. Send us the paperwork. Let us just have your back. Let us review it." We reviewed it, and we said, "You know what? For whatever that you're getting, we're going to be honest. And that's what we want people to know is call us. We are going to have your best interest in mind, whether it's us or not. We want to have your back because if we don't do this deal, we want you to refer us for every other deal for everybody in the future because you can trust is key."
Listen, in the long run, people appreciate that honesty. So, you know what? I don't mind being used as a sounding board. Nope. Somebody wants to call me up and say, somebody can get me this, and I'll say, you know what? If they can get you that, then do it.
Yep. Let me look at
problem.
it first, and I'll tell you yes.
I'll take a look at it. If it looks good, then go for it. But guess what? 9 times out of 10.
At least 9 out of 10.
All right, it's not true. So it's like the things, Harvey, that people get in the mail and they call you about.
Yeah.
The letters from Joe, the mortgage guy, and Joe's a great guy.
All sorts of things.
But, Joe can't deliver like that. It's just not going to happen. So when you get those mass mailers, you have to check them out. Run them by the person that you have a relationship. It's the communication. It's the relationship that we talk about. And then use those people as your sounding board. They're your wise counsel, and you go from there.
Yeah, there's no doubt you got to definitely watch your back on all these things. We talked about some scams recently, but we'll talk about that a little bit later in the show. It is a little bit of a hard thing to bite into at the fact that you might have refinanced in the last handful of years, and you've got this really awesome rate. So look on the bright side. If you are moving out of that house, you took advantage of some great rates and saved some money. Also, you had more money going towards principal over the last maybe 5 or 10 years. So you built some equity up, and now you're able to use that equity and use that to purchase your new home. And as I told you, rates are still phenomenal. I mean, if we, again, it's hard to talk about 10 or what happened 10 or 20 years ago. But again, these rates are still extremely on the great side. You get to write off tax deductions are still available, writing off your property tax and loan interest.
That is the point. If you're going to go ahead and take cash out to do home improvement, all right, I'd rather see somebody take cash equity out of their house and do the home improvement than dip into their savings or their investments because they're still going to borrow in the mid 4s on a 30, high 3s, low 4s on a 15. After tax, you're probably looking at the mid 3s. and you're not dipping into your savings or your investments where that's yielding you way more than that, or it should be, right, on an interest rate. So you can go ahead, and that's the better place to take the money. And again, Harvey, you're still borrowing at a very low rate. I mean, you're borrowing at a low cost of funds. So I think that's the better move.
There's no doubt it's very appealing to be completely debt-free, have that mortgage paid off and all your credit cards paid off. Don't have any toxic debt out there, but if you have to have one debt out there, it would be nice to just maybe borrow against your house because you can take advantage of the tax deduction. And again, you still keep that money, that rainy day money, you still keep that in your savings and your 401k so that money can be used at a future time. Again, markets change always. We'll keep you in tune with what's going on in today's marketplace. When we come back, tons of information. Keep it here on 97.1 The Ticket. We'll be right back.
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
All right, welcome to the show. There you go. We're back on 9:15. If you're just joining us, it's the Hardcore Mortgage Real Estate and Business Show. Just a little quick break there. We got tons to share with you, and we're going to take all your calls. 248-539-9797. We're brought to you by Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Let's move off to Gary this morning. Alex, you got that one? Gary calling in from his cell phone. Good morning, Gary. Welcome to our show.
Good morning. How you doing?
Morning,
What's up,
sir.
G?
Okay, I was listening a couple weeks ago, and you guys were talking about PMI insurance on your mortgage. So
Right.
I'm in like the 6th or 7th year of a 15-year fixed mortgage. Owe about $32,000. The house is probably worth about $125,000, but I'm still paying PMI insurance.
We got to get you out of it.
Yeah, you shouldn't.
thing-
You shouldn't be.
But the thing is, I'm locked in at a pretty good interest rate, and the interest rate now
What is
scares
it?
me. That
What-
scares me.
What's the rate?
What
that
rate
you're
is
at?
it?
3.65?
On a 15-year?
On a 15?
Yeah.
Okay. Well, there's two ways you can go. Alex will tell you one way. I'll tell you the first way.
Let me.
Okay.
Go ahead.
Yeah, the first way is this: is that you could refinance the loan, and through getting another appraisal and refinancing the loan, and Alex is going to tell you that the rates are probably relatively the same as what you have right now. We can get you out of the PMI. Also,
Okay.
the second way is that if you want to invest in an appraisal on your own, you call Mike Tomchek, and he gets you an appraisal, and then we can help facilitate sending that appraisal to your servicer to show them what the value is compared to the loan you have. And there's no guarantee that they're going to drop it. I'm telling you they should with a strong appraisal and you writing to them, and I'm hoping that you have an on-time mortgage history. You've never had a late, correct?
Maybe like one time, but I don't think it would because I just thought I sent it in and I didn't. But after 7 years, one time maybe. That's
No, okay,
Gary,
fine.
no
So
big
go
difference.
ahead.
Here's what I would do, man. I would refinance it, go to a 10-year. The rate will stay approximately the same. You'll drop the PMI, keep making the same payment you're paying right now, and you'll have it paid off in
4 or 5 years.
yeah,
you go.
I mean, it'll be done. Be done in 4 or 5 years.
Hey, Gary, a couple other questions I have for you. It's Harvey Freed here. Do you have an FHA mortgage? Is that why the PMI didn't fall off?
Yes.
good morning. Welcome back to the show. It's 9:18 if you're just joining us. Yep, it's a Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. You can call us all day long at Capital Mortgage, all weekend long at 1-800-LOW-RATE, the best mortgage banker. Always get a real strong approval letter, but more importantly, sit down with real professionals, go over the whole transaction. We're going to be talking about all those facets of the transaction, Pete. You talk about communication, knowledge, and really the expectations. And we were just starting to get into it a little bit, talking about when you meet a buyer and maybe even a potential seller. It's at the market out there. This isn't time to lowball. If the house is priced right, you're sharing that with your client, and you put a whole plan together. Can you explain how it really starts off?
Yeah, we sit down. The very first thing we do.
Get the mic up.
Very first thing we do is you give me a call. First, I redirect them over. I say, all right, talk to James first before you even come to me. We kind of get those steps backward, and then we sit down for like an hour. We go through not only the purchase process, everything that you're going to expect, all the financial costs you might incur other than your down payment and closing costs. And then we also talk about the market. We lay out the market stats for you. Say, hey, okay, you're looking in XYZ price range in this area. These are how long houses are staying in the market. This is the percentage of list price they're getting. So they have an expectation coming in. I understand we're going to be in highest and best. We know that if a house is priced right and it's nice, that it's going to be off the market soon, which means you need to if you need to rearrange your showing, your schedule to go show, that's what we got to do. And then when we offer, we have to offer competitively. They know going in that we can't bring in 10% low offer on something that's highest and best.
Yeah, Pete, one of the things I also told some clients recently is, even if you get your offer accepted, okay, so you still have 7 to 10 business days if it doesn't work out, that for some reason the house just doesn't meet your needs. Again, maybe the emotions got carried away and you went ahead and you offered the highest and best and they accepted your offer. You still have some time within the first couple days. There's no problems with you backing out within those first few days. You have that opportunity. But if you don't get your offer accepted, there is no more negotiations. You're on to the next house, the next offer, and back out on the street negotiating and trying to make offers against so many different offers. As you said, the days on the market tell the tale.
But you guys are talking about, you're talking about utopia. You're talking about somebody who did their homework up front. They have all their ducks in a row, and then you take them out looking for a house. Guys, in the real world, it doesn't work that way.
Not all the time. It doesn't.
You know what's happening.
That's why we have you to tell us.
That's right. Thank you. I appreciate that. You know what they're doing? They're in the car. They're online. A neighbor told them about the house next door. They've already gone and looked at it. They've driven by the house. They've looked at, whatever, and they got to have that house. Mm-hmm. And then when they get all their hopes up and the emotions are running really high, then they call you and say, hey, I found a house and this and that. Then you have to say, wait a minute, you got to put the brakes on here. How do you know you could afford that house? Yeah. Right? Did you talk to James? Did you talk to Ellen? Did you talk to anybody? How do you know? Did somebody run your credit? Do you know? Does anybody know how much money you make? Can you afford this house? So that's what happens in the real world.
And this is why it's important to have a lender that can get you this very quickly. If I call up James and say, hey, listen, I need a pre-qual now. I'm going to have one, very, very quickly. So we can be sitting in the house. We can be getting pre-qual right there. We can, and that I can use that time to kind of talk back and say, okay, let's lower the emotions a little bit. Let's take a little bit more of an empirical look at this. What are our values? Where do we sit? And, once we get the numbers back, can we afford this? Is it a realistic option for you? So, we don't certainly always have best case scenario, but we try and work within and educate, even if I've got to educate you a little bit about the market while we're walking through the house. That's what we've got to do. You've got to have some, base knowledge.
So, Pete, how many times have we heard this? James, Pete, Harvey, how many times have we heard this? Okay. I'm in an apartment right now. My rent is $950 a month. Okay, I checked out this house. The house is going to be probably in the $950 to $1,100. I know I can make the monthly payment, but I got to come up with the down payment. Yeah, you got to save for a down payment. If you're a vet, and Harvey will tell you, if you're a vet, there's no money down. Basically, you have to come up with some closing costs, but that's a zero down program. FHA has 3.5% down. Fannie Mae and Freddie Mac have 3% down. USDA there's a 100% program there. Okay, so there's all kinds of low down payment options, but yes, you still have to have money in the transaction. Okay, now if you can get a gift, you can get a gift. But everybody always says, hey, I'm living in an apartment, it's $800, it's $900 a month, it's $1,000 a month rent. I know I should be living in a house. The answer is yes, you should be. But can you afford to live in a house? Because not only is it the mortgage payment, because when you live in an apartment, everything's taken care of for it. When you rent, you don't have to cut the lawn. You don't have to do this. You don't have to. The furnace breaks. You call the guy.
Your utilities are sometimes wrapped into your monthly payment.
Some of the utilities are wrapped in. Okay, so there are all kinds of other costs. So that's why you need to get out in front of it. You need to go ahead and sit down with somebody and talk to somebody and say, hey, listen, here's what I make on a monthly basis. We run the credit. We take a look at what your monthly liabilities are, your expenditures are. and then we put our thinking caps on and say, hey, what's the best program for you, and how much money do you have to come up with?
Yep. And with all that being said, guys, I want to remind people, that, especially the ones that are listening, because the four of us here already know this very well, is you're about to spend more money than you've probably ever spent in your life on something. Don't wait until you find the right house to talk to your banker.
Yeah.
That yes, we'll get it done. Yes, at 8 o'clock, 9 o'clock, 10 o'clock on a weekend, I'll answer the phone and get it done for you. But please do yourself, not even me the favor, do yourself the favor and give yourself
as always,
as much time as possible.
James, as always, do things usually come out less, or do they come out more?
Well, as far as what?
And spending money.
The cost, a little more.
The cost. They always come out spending more, so you have to plan for that. You plan, you know what? You plan for a little bit more, and if it comes out the same or less, then you win. It's a win-win.
Yep.
All right, we're going to take some calls here this morning, 248-539-9797. Be sure to call in. We've got some open lines. Again, we're talking seriously here about purchasing a house, getting your offer accepted. There's lots of other ancillary costs. Actually, Alex Nafusi, one of our own Alex Nafusi, ran into this last night.
He's running into a cost right now, isn't
Emergency
he?
restoration. Thank goodness for John David, his buddy out there. He's got the big truck outside. Emergency restoration is over there pulling out, I don't know, he said 6 inches of potential problem in the basement. And I don't know if the sewage line's backed up or what. But again, there are always some additional cost in home ownership. Now, Alex has been in that house. I don't want to just use him as an example, but he's been in the house for a while. Potentially over time and over years, his sewer line might have cracked on him, and it might be backing up now into his home.
You say crapped or cracked?
I said cracked.
You said cracked.
I said
one
cracked.
and the same.
Okay, good.
Yeah.
I was wondering about that. I didn't know if there's a little play on words there.
play
That
on
was
word.
good, though. So I gave you credit for something that you didn't even do. So there you go. That was good.
But also, Pete, as you know, and Harry just mentioned, there's other things that come up, too. So you've got the down payment. And again, if you qualify for a zero down payment program, and in your area, northern Macomb County, the USDA loans are fantastic. I think that you're sort of set up right there because of so many of the families are renting, and young families, young millennials that are buying, they can purchase with zero down.
So the vast majority, there's two great things about the RD loan. Number one, in Macomb County, it's a massive area that qualifies for it. So pretty much anything north of 26 Mile Road. So you're still very close to all roads, some of the higher traffic areas. The second thing is with the income limits, and also with where the market is, kind of the rural market. I work all the way up to I-69. Yeah. It's not as hot as it is down here. So you can actually go, drive another 20, 30 minutes, and you can now not only get that zero down, but 90% of the time I can also get you seller concessions, or I can get you something else. We just closed an RD loan with like $2,000.
Yeah, out of pocket.
Pete's been very good with the RDs in the past, so.
Right, and if you can get some seller's concessions on top of that, you can really get into the house with very little, if not even zero, for some examples out there. But again, you've got the down payment aspect of a transaction. I always talk about break things down to the three components of home ownership. You've got your down payment, the closing costs, and then the escrow account, which is the prepaid items along with your homeowner's insurance. Once you get a good understanding of what those three components are, it really gives you the knowledge and the confidence to move forward. So if you know you're working with $10,000 or $15,000, you'll know if you need seller's concessions or what loan program is going to best fit your needs. And like you said, that rural development loans, RD loans up in northern Macomb County, it's such a great area. And again, that goes for any of the listeners out there. I think all of Genesee County, all
of Lapeer County, pretty much.
All of Lapeer, parts of Washtenaw County, and of course, even parts of Wayne, Oakland, in a big area of Macomb County. So again, lots of programs out there to fit your situation. Be sure to give us a call. And again, open lines here all morning long at 248-539-9797. One other things I wanted to bring out is the down payment. The nation's savings is about 5% around that area. So, most families, you don't want to wait. We've heard this in the past. I'm saving for a down payment. That really isn't going to do you well. If you have enough to get in, and we have 3% down conventional loans out there, it's just so important to take ownership now. And we look, Pete, at the families that bought even 3 years ago with you. They have 20% equity now. So they're able to either refinance, or if they had an FHA loan and they got in for 3.5% down, they're able to refinance that mortgage now and save a little bit more money.
Well, and not to mention that prices, I think, still, we're going to see a little bit of a slowdown in the price increase, but prices are increasing faster than you can save. Is I think the big thing too. Yeah. So you if you can, you need to get in now. Not only, like you guys mentioned before, the rate's going to go up, but the prices are still going up. So if you can get in now, you may as well get in now, and plus catch kind of this back end of this. We're going up. We're in year 7 or 8 of this kind of boom here. Catch a little bit of equity on the back end of it too.
Oh, there's no doubt. Home ownership builds wealth, and again, strong appreciation is so beneficial. Especially so we look at all of our first-time home buyers, and that happens a lot of time, Harry's. Yeah. People that just got lucky where they were buying homes in 2009, 10, 11, and 12. Boy, those homes are worth almost double now.
Yeah, Pete mentioned that we are in our 7th year of that home buying cycle, that increase in home buying. This is the 7th year because we sat here 7 Januaries ago and said, hey, listen, this is going to be, we can see the upswing. Now we are in the 7th year of a home purchase market. That's number one. Number two, as we're sitting here, and here's my phone, everybody can see it right there. We're on Facebook Live. All right. Harry, heard what you said. We got to come and see you about getting pre-approved. My wife's been shopping for homes, and guess what? We don't even know what we can afford. Yeah, here you go. It's right here, live and on the air. So, yeah, that's what you got to do.
All righty. When we come back, we're going to go grab all those phone calls. 248-539-9797. Give us a call.
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
32. We'd love to hear from you. 248-539-9797. Again, the Hardcore Mortgage Show is brought to you by Capital Mortgage Funding and 1-800-LOW-RATE, the best mortgage banker.
Where'd that Dave guy who was on the air? Dave was going to grill
Dave had an
our,
appraisal question.
Where is he? Left
Come back, Dave, please.
Dave, call back. You would what? Don't let Tom check intimidate you.
Dave from Milford.
You know what? We got some calls coming in this morning, and again, we'd like to hear from you. We brought in a Mike Tomchek appraisers. You can ask all the appraisal questions, give him a couple of helpful tips, and of course, Sean Locke from Title Partners answers some of the title questions you got going on and what happens at the closing and prior to the closing, things that you can do. Sean, we'll actually get into some of the other things like deeds and land contracts. If we get some time, we'll get into all that stuff. So let's move off to Ed on a cell phone. Good morning, Ed. You got a question about a refinance? Go ahead, sir.
Yeah, well, my wife. Hi, by the way. Nice to talk to you guys.
Good to see you, buddy. Thanks, man.
My wife had purchased a house a long time ago. She was in one of those interest loan-free loans, or interest
only.
And what happened was she had to file bankruptcy because it was so bad that the payments got up so high. So she filed bankruptcy in 2011. She had a pool, a $30,000 pool that was added to the home after a while it was purchased. Once she filed for bankruptcy...
I'm sorry, so she put a pool up for $30,000 and filed for bankruptcy?
Well, no, it was way before. It was when she bought the home originally.
Okay.
So what happened was when she filed for bankruptcy, she was told by her attorney, that the house had to, she wasn't going to be able to have the house. She had to reaffirm it. And the loan for the pool was paid off by insurance from the loan when they... before she explained it was for, and so now years later, the mortgage company was taken over by SPS, and they came through and they're harassing her to pay for 6 months that she didn't know she was behind because of the.
Well, yeah, she owes the money.
Correct, but this happened over a 7-year period.
So what? You still owe the money, dude.
Hey, hold on, I want to hear it.
No, we know that. We understand that. We understand that.
Right.
But the problem is we paid it all up.
Mm-hmm.
We're all caught up now.
Right.
And we want to, if we're looking to sell the home, is it possible the lien's still on the home from the pool even though they were paid?
Sean,
did you catch that one?
Focus, Sean.
Is lien still on title, even though they paid off the loan on the pool?
Well, it could be.
Yeah, it could be. I mean, it sounds really it's like a really classy deal because file bankruptcy, put a pool and all that stuff.
I'll make you a deal. We can go ahead and pull title on it, and we can check it out for you.
Yeah, Ed, there's things we can do that won't even cost you money to check it out.
I'm not pulling. And you know what, Ed? Have a good day, buddy. I'm not.
The Ticket.
Brought to you by Jack Demmer Ford. Michigan State football coach Mark D'Antonio's contract extends in 1 year through the 2023 season. Jalen Hayes, 24 points. Oakland U over Cleveland State, 82-66. UDM defeats Youngstown State, 94-84. MSU at Northwestern today. That at a 2 p.m. tip-off. It'll be Michigan hosting Ohio State tomorrow at the Chrysler Center on AM 950. WWJ tips off at 1 p.m. Right here at 97-1 the ticket tonight. Red Wing hockey visiting Nashville. Our broadcast starts at 7:40 at the Olympic Games. American Lindsey Vonn misses out on the Super G, finishing sixth. Semifinals women's hockey today. USA against Finland. Men's hockey right now. Prelim. U.S. getting waxed by the Olympic athletes in Russia. Currently, it's 4-0. Justin Thomas hitched a ride to Los Angeles in Tiger Woods' private jet earlier this week. Unfortunately, Thomas will have to find another ride home as Tiger missed the cut yesterday at 6 over par. He's in a tie for 116th after butchering up the course at a +5 yesterday. That's one shot behind amateur Scott Scheffler. At the Ticket Update Desk, I'm Jeff Lesson. For more, 97.1theticket.com.
You work hard. You play hard. We talk hard. 97.1 The Ticket.
All right, welcome back to show 933 if you're just joining us. Hey, it's not too bad outside, and it's supposed to heat up over the next few days.
You can't play golf, but I like Jeff Lesson. He's all over Tiger Woods.
Yeah.
Any chance he gets, he's all over him.
No doubt. We sort of heard that here. Hey, a couple of things Capital Mortgage wants to send out there. Of course, we want to hear from you this morning at 1-800 actually, here in the studio, 248-539-9797. Always at Capital Mortgage at 1-800 Low Rate, the best mortgage banker. We wanted to send out a congratulations. You know, Coach Campy here, last night got his 600th win over there at Oakland University.
He's awesome. He's been part of the community for a very long time, and we've had him in our gym a couple times looking at some of our kids when we were at Wall Lake Central and Wall Lake Western. He was in our gym and had the opportunity to talk to him, and this guy's he's just a great guy and a super individual, and he's a phenomenal coach.
Yeah, definitely. 600 wins is awesome, and Coach Campy, great job. Keep it up over there, and all the guys on the team keep fighting hard, and hopefully you guys will find yourselves in the tournament here in a couple of weeks. We'll see how that goes. Also, a little heads up there. We always like to talk about some local high school basketball because these are the communities we live in. A little heads up there. Clarkston is #1 in Class A right now. Congratulations to the boys out there. The Wolves are working hard. Ann Arbor Skyline at #2, Canton 3, Hazel Park #4. We've got East English Village out there on the east side at #5, UAD at 6, East Lansing at 7, West Ottawa. I'm not familiar with that area at all, Harry. You're going to have to fill me in on that one. Belleville at 9 and Wayne Memorial at 10.
All right, we're good.
That's it, Harry.
Yeah, that's it.
I'm only going to tell Wall Lake Western came in at 54.
That's all right.
That's good. You guys are in the mix.
Hey, if you got to be on a list, got to be on a list.
They're making it.
Everybody love lists.
We want to hear from you here on the Hardcore Mortgage Show. Again, we're going to dive back into mortgages and real estate. Let's go to Adam out there in Rochester. Adam, welcome to our show. Go ahead.
Hey, well, I haven't gotten pre-approved, but I've been spending the last year paying off like all my debt. I've got some money in the bank, but the real question is, do I need a real estate agent to like go check out a condo that I'm interested in?
Most likely, yes. Yeah, you are going to need that. Again, if a for sale by owner would be a different situation. And Pete, you definitely have to hire a professional to get in there because you're going to have to give your license number and all that. Give me that.
Yeah, so I would say that going and seeing a condo is there's not very much difference between that and doing a residential house. I mean, obviously the structure is a little bit different when we come to the ownership, but it's negotiated the same way. You still have all the same things that go into a purchase. Even a for sale by owner, I go into and show for sale by owners and we negotiate with them too. So I tell people there's very, very few things that we cannot help you out with. People ask, do you do foreclosures? Do you do this? I do all of it. And it's always helpful.
Yeah.
And the other thing too is, people forget that, our commission to you is free on the buy side. So there's the only thing you're doing by not using a buyer's agent is putting yourself at a massive disadvantage.
Right. So, Adam, again, it doesn't cost you any money because real estate agents are paid by the seller of the transaction, not by the buyer. So definitely, if you want to even give Pete a call, he'll give you a call after the show. Is there something you saw that you wanted to go see?
Yeah, it's actually, funny enough, I work at Oakland University, so congratulations, Campy.
All right.
Yeah, there might be some information that a realtor could give you on that property. There might be other things that a realtor might be able to find out that you can't find out, or a question that they might be able to ask that you just don't have the wherewithal to figure out. So I don't know. I think anytime you can hire a professional, you hire a professional. It's just not what you do. And I think that if you stayed in your lane and you're good at what you do and let somebody else be good at what they do, they're going to help you out and they're going to give you that wise counsel and information that you need to benefit you the most.
Yeah, we'd love to talk to you and see if we can find out some more for you.
Great call.
Oh, perfect. Thank you.
All right. Thanks a lot for the call, Adam. Appreciate that. Again, 248-539-9797. I'm going to quickly, before I go to John out there at Emergency Restoration, let's go to Nick out in Troy. Hey, Nick, you got a question about investment property. Go ahead, sir.
How's it going, bud?
Hey, Nick, you there?
How's it going?
Good,
Hi,
good,
Nick.
good. Nick, go ahead.
Good. I got a question. So I own my home.
Mm-hmm.
I'm looking to get an investment property or two with my girlfriend, and we're not sure. We're trying to get around this 20%. Not sure if we can. She doesn't currently have a mortgage, but not sure if she can get one by herself. So if I were to co-sign or or help her out with that. Is there a way to get around putting down 20% for investment property with me on?
Well, if she's going to live there as her primary residence, so that is not an investment property. So that would be key. That she.
I don't think he said that.
Okay.
You didn't say that, did you? You said you guys want to buy investment properties together, and that she wants to be on it, but you don't know if she can qualify on her own. So you might want to co-sign for her.
Correct. So we got two options. We either want to find a house that we like and rent out ours currently, or stay at ours for the time being and find something that's more an investment source for us. But the trouble I'm having is I'm on the mortgage. If I go on anything else, I have to put down 20% for an investment property. Now, if we make that new home our
primary residence, yes,
and rent out the current
20% down.
No, you do not have to put that much money down. So that would be the key right there. Now, it is a fine line, and you have to be honest in your intentions. You can't commit a fraud here. But yes, you can purchase a new house, and many people buy new homes and use their existing house as they turn those into rentals because it might have been their starter home. I don't see any problem with it. You could go as little as, FHA loans are available for you, at 3.5% down or 3% conventional. There's lots of choices you guys have.
Yeah, so Nick, you just have to declare. That's the big thing. You have to declare what you're going to do with the new house. If you're going to live there, you declare that you're going to live there. And believe me, people check if you're going to live there.
Yeah.
So then if you're going to rent out the old house, that's fine. Or you declare that the new house is going to be a rental property. That's the first part. The second part is, yes, you can put down, in either case, less than 20%.
Yes.
And Nick, the now is a great time to get into this game. The rental market is incredibly strong. So we're seeing a lot of people that are getting really nice, NOI numbers on the rentals.
Yeah, and again, it's a starting point for a lot of families, Nick. You get someone in there to rent it out, and again, they build their credit up. Maybe they become a buyer of the property. What else did you have to say on that?
No, that was it. I was just, like I said, capital as far as, I'm looking for a little fixer-upper myself that I can, like I said, rent out. But if I can get around that 20% and have that capital throw into the home, that's kind of the key right there for me. So, great. If I know I can get around that 20% a little bit legally, like you said, that's definitely something I want to look into.
Okay. Yep, you can do it.
Okay, you can definitely walk a fine line there, and we'll show you how to get it done the right way and, stay above the bad stuff. Good stuff.
Excellent.
All right,
Excellent.
Nick, thanks for the call. We'll be following up with you and get you the right approval letter and break down all those numbers for you. It's exciting stuff.
Oh, yeah, and Nick, we will give you absolutely free, let you know what your current house might rent out for. And kind of give you those numbers there, kind of figure out what if it works to rent out your current house.
All right, before I go out to John out there and at Emergency Restoration, I got Rob calling in on a cell phone. Rob, your question looks pretty interesting. You say here that a landlocked property, no private road agreements causing issues. Go ahead, Rob. Give me more information on that.
There's a piece of property that I'm looking at, and it's a nice, 1,300 square foot home on acreage. It's surrounded by large plots of land, but when I inquired with the real estate agent whether the roadway going up to the property has a private road agreement, they said no, it doesn't. But the owner of the property said there's no issues with it. And of course, my concern is, what if he dies or what if he sells? Without a private road agreement, I'm going to be basically, locked out of visiting that property if I buy it.
Yeah, I would agree with that statement.
I'm wondering if there's, will that cause issues with getting a mortgage when you do not have private road agreements in place?
Well, let me ask you this question. If the realtor says the guy's not going to have a problem with you going up and down that road, why won't he put it in writing just for you to say, hey, listen, and create a private road agreement? It doesn't have to be extensive. All it has to do is say, gives you the right of way, ingress and egress to your property, that you're crossing over his property. Now, I'm going to caution you, I'm not an attorney, I don't play one on the radio. Okay, but I can broad brush it for you and tell you that you should have some kind of, whether it's written on a napkin, a piece of paper, a tea leaf or something, you need to have something in writing that says that you're going to have ingress or egress, that he will not impede you from getting to your property. Because that is his property, and you have to cross his property to get to your property. So that's why some lenders...
That's what I'm worried about.
Right, and guess what? I think you have proper reason to worry.
Yeah. Oh, yeah. I would want to look, too, if the realtor's telling you that if there's already... It may not be a private road agreement, but there may be an easement already on the title that goes with the land. So I would want to check about that, too. Because there's no reason that there shouldn't be something in writing either on the title or in the purchase agreement.
Right. And again, you can maybe you can make up a road.
I'm getting a lot of that pushback, so it makes me wonder, okay, did they did they split this land improperly if they had the implications of putting another home back there?
Mm-hmm.
Are there things that maybe they didn't follow through with the township or the county in order to make sure that that pathway going back to that home meets any type of certain road requirements? And again, my initial question is, will that come up as a issue for not getting a mortgage if that's not there in place?
Yeah, it does
that's
come up.
one of the possibilities, and it does come up, and I had one come up 2 Mays ago just like that. Somebody had a private road maintenance agreement in place, but they didn't disclose certain things in the private road maintenance agreement, and the potential buyer backed out of the property because there wasn't full disclosure, and that's a big thing. It's full disclosure, and that could be an issue here. I mean, is everything being fully disclosed to you?
I think, Rob, you need to get down to the city hall and find out what kind of records they have, see what the county has and all that. Again, I don't think the city's going to be open on Monday. Got President's Day on Monday, but definitely on Tuesday, get down there.
Have the realtor go ahead and put some pressure on the seller and say, hey, listen, just broad brush it, put about 4 sentences down and say that this guy can have ingress and egress to his property, that you're not going to go ahead and impede that.
Right, private road
That's
addendum
one
is
of the
very
questions
easy.
I had for both my real estate agent and his.
Mm-hmm.
I said, listen, you guys got corporate attorneys. I said, you guys need to, to look and research this for me because it's not really my job to research. I said, but then you guys got to get with your legal teams and put something down and document this and negotiate this and get one in place if you think I'm going to be interested in buying this property, because it's to me, it's a big red flag.
How many acres is the property?
5 acres.
Good. Sounds nice.
Yeah.
I'm glad you're doing your homework, and I disagree with you. It is your job to make sure you're fully informed.
Well, I mean, I think it's their job to put a private road agreement in.
I'm saying that's true, but you're also now, and I'm complimenting you, you're also gaining the knowledge by doing the investigation.
Mm-hmm.
So if more people did what you are currently doing, they'd run into less problems. So
Just
I
lift the
congratulate
finger.
you.
A little bit of effort's all we ask for.
I think you're doing great.
Absolutely.
Yeah. It sounds like a winner, Rob. And again, hey, Rob, just looking at it, if you can't get a private road agreement, would you be able to build a road to that house on your own?
It might be a long way.
Personally, I mean, it's a dirt path. I mean, I could, go in there with the bulldozer and upgrade it with some gravel and
Good
stuff.
stuff.
He's not doing that.
Hey, Rob, we want to hear about this, so definitely we'll be following up with you, and we'd love to help you with the mortgage. If you can get that private road agreement, we'd love to help you save money on a new mortgage. Hey, when we come back, all of your phone calls, 248-539-9797.
Hi, Harry Glantz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Four 539-9797 live here in the studio. We are brought to you by Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. It's Harvey Freed, Harry Glantz, Alex Nafusi from Capital, Sean Locke from Title Partners, Mike Tomchek, appraiser aficionado from Paramount Appraisals, and tons of information. Let's move off to our calls here this morning. Let's first go to Megan up there. Good morning, Megan. Thanks for calling in.
Yeah, thank you.
Hi, good morning.
Hi, Megan.
Hi.
What's up?
I was just calling. We've bought our house in 2012, and we've been paying PMI on it. And, we have increased the home value about $50,000. However, our current mortgage company doesn't allow us to refinance or get it reassessed based on the FHA loan we have. So the value is more, but we don't have that 20% down still. I was wondering if we should look at refinancing with another company.
Yeah, I would definitely take a look at it. I mean, there's products now called lender-paid mortgage insurance. Even if there's not the 20% equity, you can refinance and not pay PMI. Even if for the sake of round numbers, if you owe $90,000, the house is worth $100,000. There's products out there that we can cover the PMI for you. You're on an FHA mortgage right now.
Yeah.
Did you go FHA just because of the low down payment, or was there a credit issue? What was the scoop with that?
Definitely not a credit issue, just the low down payment.
Mm-hmm.
We were out of college when we had purchased our house, and we kind of still just basically pay, the minimum payment, so we haven't really gotten that 20% on there.
Go ahead, Mike.
Just out of curiosity, how do you know that you increased the value of the home by $50,000? Where'd you get that number?
We had it assessed.
Oh, okay. You did an
You had it
appraisal?
appraised or assessed?
Yeah. We just had I guess we didn't have an official appraisal, but we had a realtor come in and kind of look at the comps and see where we're at.
Yeah, like a market analysis done where they're showing you all the comparable sales within reason. Although Mike Tomczyk will tell you that's definitely not the gospel.
That's not the be all end
My
all.
hair almost caught on fire right there for a second.
Oh, sorry about that.
Hey, Megan.
Listen to 97.1 The Ticket anytime, anywhere. 97.1 The Ticket.
All right, welcome back to the show 950. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. 1-800-LOW-RATE, the best mortgage bank. You're going to save a ton of money on closing costs, get the best interest rates, and more importantly, get the confidence to move forward and make a really great offer and enjoy home ownership. We got so much to still share with you here. Let's move off to John. I promised John out there, Emergency Restoration. Hey, John, you still there on the line?
Yeah, I'm here.
Hey, John, wait, is it true? Is Alex's house all messed up? I mean, come on, you got to verify this.
Yeah, it is.
Well, what happened? Tell everybody what happened. Because this is what happens when you own a house. I mean, there's obviously way more good things that happen, but tell us what happened out there.
Well, last night we got a call in. I got a call from Alex last night. So water was coming up through this drain line. So what I did is immediately I had a plumber come out. The plumber came out. He snaked the line. He had sewage coming in, raw sewage. He had a clogged line in his home.
Excellent.
So we snaked the line out. So we're out there today. We're going to be cleaning it up, getting rid of, disposing of everything, and cleaning it up and putting it back together.
Good. So we can make fun of Alex when he comes in on Monday, right?
Yes, you can tell him he's full of it. Yep.
There you go. Hey, did you throw one of those cameras down there and take a look at it and all that kind of stuff? Or tell us what you did.
We're going to right now. Last night was an emergency service call. So what we did last night, we snaked it out. And then Monday morning we'll be out here, and then we're going to take a camera and scope it out, make sure before we put it back together, make sure everything's okay.
Hey, will you remind Alex that some bad things sometimes happen to good people out there? I'd like you to remind him that right now.
I want to know because we talk about home ownership and the cost of home ownership all the time. It's just not about making the payment. What's this going to cost our friend Alex?
Well, this one with the damages and everything, probably close to $15,000 to $20,000.
Oh my God!
We'll talk about insurance.
Hey, I'm not laughing at you, Alex. If you can hear me, I'm laughing with you.
No, he's got insurance here. He's going to be all set.
Oh my!
But anyways, you put all those old trophies away that he was saving. If they're damaged, you can just throw them out now, and we'll be all set. But we thank you for getting
Thanks
out
for the call, Alex. I'm sorry, buddy.
John David, thank you very much. John David, Emergency Restoration. Again, there's a lot of great companies out there.
Thanks,
and,
John.
John David's definitely one of them there. And nothing wrong with having friends in industries that you need, especially when something like that comes up. Hey, Pete, let's go off to this call, and then we'll come back with a little more. Again, 248-539-9797 if you want to join the show. Tom, you're live on 97.1 The Ticket. Go ahead.
Hi, guys. I really enjoy your show, regular listener.
Thank you.
My question is, I have a first home here in Fort Gratiot, Michigan. We're just outside of Fort Huron. House is paid for. I have a HELOC on it. Balance on that is $37,000. So that's it on this house. I own a second home in Traverse City. Bought it 3 years ago, 4%. $131,000 on that. That purchase was $172,000, and I have a mortgage with a local bank up there.
Mm-hmm.
My question is there any conceivable or worthwhile way of getting this HELOC off of this and doing a refinance on the second home, so I just have the one conventional mortgage on that? It would be a cash out, I think, on the other one.
Yeah, it's close. It's close. The problem is I don't think you have enough equity to pay off that 37. It'd be a little tight. The numbers are a little bit tight, unless the up north property, the Traverse City property, is worth considerably more amount of money.
It seems to be based on comparable sales in those 3 years since we bought it. It's been a subdivision, and just based on comps and stuff. Again, there's been no new appraisal done on it or anything, but those other factors that you currently hear people talk about, your Realtor.coms and your Zillows.
Yeah, is it worth 200? Put a number on it.
Yeah, Tom's it worth 200, 220?
200. It's saying around 200 right now, slightly over.
Well, 20%. Yeah, if you took the 80% off of that, you would be looking at
160.
The 160 amount, and then 160. I don't think it gives you quite enough. We're at 137. Yeah,
not there.
It might be close. It depends on, and we.
It's even about just kind of breaking even, just to tidy things up, to have this totally free and clear here.
All right, good.
My downstate home.
You know,
you guys.
You probably could. Maybe you could do it the other way. What's the house down here worth? The one that you only have the home equity on.
$225,000.
You almost could do it the other way then.
Yeah.
I think you could do it the other way then, because you only owe 37 on it. So you'd actually be able to maybe if you have a little bit of extra money, Tom, we could do it the other way around. We could pull all the equity out of your primary residence, not all of it, up to 80% cash out, use that to pay off the Traverse City home, and then you'll just have the one mortgage.
Interesting.
Yes.
Interesting. Yeah, I'd be interested in hearing more about it.
Well, it's a great call. We'll call you. Yeah, we're going to call you this morning, and we appreciate your calls, man. That's great stuff, Tom. And again, thanks for listening to the show. Let's run some numbers for you, and maybe we can come up with a good solution. I'll save you some money. It's a great call.
Fantastic call.
All righty. A couple more things to carry out. I just wanted to dive back into a couple things about purchasing again. Recently, we talked about making the offers. Pete, there's so much competition out there. And I heard recently that the old biography letter, the telling the sellers your situation, that your family would like to move in, I heard that was getting a little cheesy. But I said this. How about a conversation with the selling agent to maybe just offer up in the letter some other things, like if you don't want to tell them how great their house is and use that old cheesy letter. I'm starting to hear those are cheesy letters. I don't know. I think it depicts that your family really enjoys their house and finds themselves wanting to buy it, and appeal to their emotional side.
I think I'm always a little bit careful with not getting any fair housing trouble when you're writing these letters. So I always scrub some of these letters, but I think they can be very effective in certain situations and when you're naming certain things about the house. But I think having a conversation with the selling agent and also having them reach out to your lender and understanding, hey, this is a good quality buyer. They're not somebody that's going to fall through. They've got good debt to income ratios. I think that's really important too. So if you have a good relationship with that co-op, you have a good relationship with your lender, it can be just give you that little extra edge that you need. And also getting in first, I think, is big too.
Right, and we always encourage that the listing agents give us a call on the approval letter. That's why our names and numbers are on there. Give us a phone call, and you can find out more about our borrower. Now, we're going to have to tell you everything about them because there's confidential information, but definitely give you all the strong assets on why they would be a great buyer for us, and also a great opportunity to maybe explain your side of the story. Maybe they don't need to get in there right away, and that occupancy really helps a lot of families that are selling.
Yeah, we go through. We're almost seeing the reverse what we used to see. We're seeing contingency on finding a new home.
Right.
So sometimes giving them the extra occupancy. Sometimes it's not always price. It's price and terms. So sometimes if we can't adjust the price, we can adjust the terms to make up for that. So I think we see that a lot.
Right. A lot of times a person right there might be selling their house. They might be building a new construction. Again, my house might not be done till June.
Or they might just not be able to find a house. We're low inventory on both sides. They may still need to find something else for them too.
Boy, having the confidence that you already have your house sold, you're already basically put an agreement together, maybe not completely signed, but you guys, you know that this is your buyer. Now you can go out and really aggressively shop for that next house for your family. That's a great point.
Yeah.
All right, we're going to just touch on one other thing real quick. Credit scores. Credit scores go from 300 to 850 in the mortgage world. And again, consumer credit reports are a bit different than the mortgage credit report. So I want any listener out there to know that we have software at Capital Mortgage Funding that will help you. It'll show us what you need to do to move your credit score up. It typically takes lines of credit. So be very careful out there for anyone listening. Don't close your open lines of credit. Those are the accounts that you need to keep open because you can establish and build credit by having these open lines of credit. It takes credit to get better credit.
Yeah, but it
out
also
there.
takes time to get credit score up. It's not going to happen overnight. And just because you go in and you pay off that debt that was lingering out there and you've might have had a charge off or delinquencies, just because you want to go ahead and make an arrangement, your credit score is not going to go up 30, 40 points right away. It takes time. Just as it took a little time for you to destroy your credit, it takes a little bit more time to go ahead and get it back, but we can certainly help with that, which is Harvey's point.
Yeah, those are great points here. Yeah, I threw out a couple extra things. Helpful tips on paying off your house early is always make sure that if you want, you can make one extra payment a year on your house. Again, budget yourself, sit down with your mortgage professional, your financial planners, find out little helpful tips. Any way you can get into a 15-year mortgage, that's probably the key. And again, the families that are really building equity out there have taken advantage of it. And it's not too late. That's the key.
There's no prepayment, Harvey, as you know, on any mortgages that we do. Do not sign a mortgage or a note that has a prepayment penalty on it. You can always take your 30-year and you can make it a 15-year or pay it off at your leisure, however you want to do it. I think, and one of my favorite programs we talk about is a 15-year fixed. You're paying a lot of principal right away. If you can make that payment, that's a great program to go on.
Yeah, a lot of times once you stretch yourself out a little bit, you get pretty comfortable with it, and you find yourself maybe just not going out that 1 or 2 extra days in that month. And Pete, as if we're going to go out on a Saturday night, of course, everyone's excited. Saturday night in Detroit's always a lot of fun. But again, it adds up quickly. You go to the movie and dinner, and you're at $100. Well, that's just one night $100. You find that if you find yourself doing that twice, or saving that money twice a month, $200 towards your principal. It's $2,400 a year. That's usually more than one payment towards your principal. And one extra payment, James, as you know, one extra payment on a 30-year mortgage about knocks you to 4 years off your mortgage. So you throw 2 years at it. Easily. Now you're knocking 8 years off your 30-year mortgage, and it's a great helpful tip to build equity and pay down your principal. So a couple extra things here on ways you can save money. And again, we want to throw out there, we have a full staff at Capital. So if you're out there, if you want to call and start looking at houses, be sure to call Capital Mortgage at 1-800-LOW-RATE, the best mortgage banker. Get that approval letter. Peter, any final words?
Come talk to us. Everything's pretty hot. It's great on both sides here. We'd love to talk to you.
It's fantastic. Pete Touring from Coldwell Banker out at Weir Manuel out in the Macomb office in the whole area. Pete, you're awesome to have on. Looking forward to getting you back in here again.
I appreciate it.
Fantastic. All right, we see Pat Caputo out in the lobby there, so he's coming in. He's got sports. Keep it here on 97.1 Ticket. For James Lutz, Harry Glanz, I'm Harvey Freed. We'll see you next Saturday.
Have a great day.